Hello friends, today's topic, do you have guts to hold your stocks if they fall 50%? I am Dr. Bharath Chandra. Purpose of the video is financial education of society. In our YouTube videos and courses, we always ask people to focus more on long-term investing because number one, it is very profitable. Number two, it does not require much time to invest and monitor. 3. Generally, the risk is lower. 4. Chance of loss is lower than short-term trading, intraday trading, and futures and options, etc. However, there are few things in long-term investing which makes it difficult for investors. The following important decisions need to be taken. Number one, which stocks to buy. 2. Whether to continue investing in those stocks. 3. Whether to hold or sell some stocks. To an extent, if we know how to do fundamental analysis, we can shortlist a list of stocks, start investing in them. However, the more difficult part is to be able to evaluate whether to hold underperforming or poorly performing stocks in our portfolio. We came across some very interesting and useful data for all long-term investors. The number of times 5 stocks have fallen more than 20, 30 or 50% the last 20 years. Watch the complete video to get the complete message from the video. Difficult long-term journey. Company ICICI Bank per annum return since 2000 18%, 20 years average return on equity 13%, number of times fall in the last 20 years minus 20%, 14 times, minus 30%, 8 times, minus 50%, 4 times the last 20 years. Bajaj Finance per annum return since year 2000 37%, 20 years average return on equity 20%, and number of times fall in the last 20 years minus 20%, 14 times, minus 30%, 9 times, minus 50%, 3 times. Now coming to the stock M&M, per annum return since year 2000, 15%. 20 years average return on equity, 21%. Number of times it has fallen more than 20%, 13 times. Number of times it has fallen more than 30%, 6 times. Number of times it has fallen more than 50%, 3 times. Now coming to the next stock, Titan. Per annum return since year 2000, 30%. 20 years average return on equity, 32%. Number of times fall in the last 20 years, minus 20%, 13 times, minus 30%, 10 times, minus 50%, 5 times. Siemens, per annum return since year 2000, 21%. 20 years average return on equity, 24%. Number of times it has fallen more than 20% in 20 years, minus 20%, 12 times, minus 30%, 9 times, minus 50%, 3 times. Now, certain observations and suggestions regarding today's video. Number one, in the long-term investment of 15, 20, 25 years, there will be plenty of times when a stock will fall 20, 30 or even more than 50%. At such times, it is extremely confusing to decide whether to hold the stock or sell. Many times, holding the stock will be correct decision, but many times selling will be necessary since the company may be deteriorating. Number two, even if you are holding blue chip stocks, it becomes extremely difficult to hold stocks when a stock falls by a huge percentage for some reason or consolidate for more than years in a narrow range. Example, ITC consolidated for 2 to 3 years, Reliance Industries consolidated for around 8 years in the past, Tata Motors was on a downward trend for many years in the past. Number 3 observation, at such a time when stock falls heavily and trades at lower prices for quite some time, we lose our conviction and we are doubting our decision of buying the stock. Lot of negative news is there about the company at such time. Number 4, we can only read and research a lot about a company and attempt to find out whether a company is going through a temporary problem or a permanent problem. Example, a stock may fall 25% for a short period due to an IT raid or some strict action by the government. This may be a temporary problem as long as there is no major problem in the business of the company. 5. Sometimes a company's business may be deteriorating due to intense competition, falling demand, or company's product or service, or some other reasons for company's profitability reducing. 6. As investors, we can never be 100% sure that a problem is temporary or permanent. There is always uncertainty. Many investors assume that stock market is a science where there is a correct answer for everything. Sometimes we will not know that we are correct or wrong until some years into the future. We have to take decisions after doing our best possible research. 7. Due to the uncertainty, we are likely to make few mistakes during our long-term investing journey. But as long as the mistakes don't have a significant impact on the overall portfolio performance, we should not worry. It is not possible to eliminate all mistakes. They can only be reduced. 8. So the only way to become a good investor is to be very good at fundamental analysis and keep reading, researching, and be up to date with the things around us. This will take us to take better decisions and reduce mistakes. More the experience you have, the more confident you'll be in taking decisions on which stocks to buy, whether to hold or sell. Number 9 suggestion or observation. The investors who are usually confused on what to do are ones who have blindly invested in some companies and have no idea about fundamental analysis or how to research. To be successful in stock markets, you need to develop the capacity to take independent decisions. End of the video, here is the question. Do you agree that deciding whether to hold or sell a stock is more confusing than actually buying a stock? You can type yes or no. In case you are not the member of this particular channel, this is the time to subscribe, press the bell icon, send the video to all your friends. The video is good, press the like button. Thank you for watching. Bye bye. All the best.